Hello and welcome. You have tuned into Buy Now, Sell Now. I'm Shrishti Sharma. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. In a short while from now, we'll be live on Twitter, as you can also connect with us on our WhatsApp number that will be flashing on your screen shortly. But before coming to that, let's have a look at what the markets are up to. So the first day of the week is going to be a very important and a crucial week because we have the RBI monetary policy, and not just that, it's a truncated week, so a lot of action is expected. But firstly, onto the index level, not much of an action or not much of a movement since the morning itself. We started in the positive territory, drifted lower, and we are just sitting out there with Nifty trading with a cuts of 26 points as well as Bank Nifty trading lower by 19 points. But I have to say that the breadth of the market is clearly in the favor of the bulls, and that's where you can see the strength out there. But talking of some of the index movers, and ONGC leading the charts, as in the international markets we are seeing the crude prices are inching up, holding a gains of more than 5%, and that's on the back of when Saudi Arabia and the other OPEC plus nation decided to cut their oil production, and that's what made the crude shot up. In the Indian markets, ONGC is clearly favoring in the trade with the gains of 3.3% as of now. But other than that, since it's the start of the month and we have all the auto sales number out there, so Hero MotoCorp, Maruti Suzuki, Bajaj Auto, Eicher Motors are the next top movers in the Nifty 50, and have to say, out of the top 5 Nifty 50 companies, 4 are the auto counters. But what's happening there, we'll tell you in a short while from now. But other than that, on the flip side, BPCL, Adani Enterprise as well as JSW Steel are some of the losers in the Nifty 50 pack. So that will be interesting to see where the market moves on in the second half of the trading session. Especially, we'll also try to get a sense from our experts. But let's move on and focus on the auto counters, because that's the buy now, sell now lens topic for today. If we will see, let's talk about the trends we are picking up. We have been highlighting to you that we are once again expecting the commercial vehicle to outperform. That's on the back of two reasons. Firstly, since the month of April itself, all these companies are hiking their prices on the back of new emission norms, that is the RDE norms, that will be kicking in, and a price rate hike of around 3 to 5% is what all these companies have taken. So a pre-buying factor did play in the month of March itself. But other than that, the underlying demand for the commercial vehicle industry is also holding strong. And if we will see from the likes of Ashok Leyland as well as Tata Motors as well as Eicher Motors, VECV, all these companies have surprised onto the numbers. We were expecting double-digit growth, but if you will see, Tata Motors as well as Ashok Leyland posted a sequential growth of 30%. Eicher Motors a growth of 63% on a month-on-month basis is what we have witnessed. So a strong set coming in from the commercial vehicle plays. From the passenger vehicle segment, the sales was seen to be holding steady. M&M has outperformed out of the pack with a sales data of 66,091 units for their auto division. That's a growth of 12%, while for Maruti Suzuki as well as TVS Motors is almost flat. But have to say that FY23 has been a record one for all these three companies in terms of sales growth. Coming to the two-wheeler companies, there we get to see a surprise, because for Hero MotoCorp, not just the surpassing the expectation, but the demand was seen to be holding strong is what the company has indicated. 33% growth on a sequential basis. Bajaj Auto is yet to upload the numbers, while for TVS Motors it was a growth of 15%, and Eicher Motors Royal Enfield recorded its highest ever sales in the year gone by, and that was almost a flat growth on a month-on-month basis. And tractor sales was also seen to be holding steady with a growth of 30% on a month-on-month basis. But let's move forward. That's the basic trend we are picking up. But what are experts finding out, and what's the fundamental as well as technical take by our experts? Let's connect with them. We have Ashish Maheshwari as well as Kunal Bothra joining us today onto the show. Ashish, a very good morning to you, as well as Kunal, a very good morning. Ashish, firstly, let me come to you and talk to you regarding the trend we are picking up. After a long time, we are seeing the two-wheeler companies especially making a rebound, and the commercial vehicle demand is seen to be holding steady. But going ahead, what is the expectation on the two-wheeler companies specifically, the kind of rebound we are seeing in today's trading action? Do you expect that to continue going ahead?
Expect this robustness in demand in whether it's two-wheeler or tractor or cars will continue to gather momentum. One important thing which is happening in this industry now is that lot of people are now going for a newer model, and they are just dumping their old vehicles what they are having because of new look as well as more fuel efficiency, etc. Along with there's good demand of EV related velocity, which is again picking up in two-wheeler segment. So, in my view, whatever traction we have seen in March is not one-off. You may say that price hike was coming in the month of April, but price hike is also not that much that you will just jump to buy the vehicle in the month of March itself, or just to claim the depreciation, etc. In my view, there's actual buyers are there. There's so much happening in construction industry per se, so a lot of demand for TVs, etc. is there. Again, for rural side. The good demand in the tractor is also again picking up. Just see the numbers of tractors being sold by Mahindra and Mahindra. Amazing set of numbers month over month. Mahindra and Mahindra reported. So I am quite upbeat as far as this industry is concerned. In my view, this part of consumption theme. So monsoon or no monsoon, this traction will continue.
Kunal, let me switch it over to you. Harsh joining in as well. What's your sense on the auto pack? What looks promising on charts?
So in fact, what I've flagged off, Harsh, is the entire auto index and how the charts are actually panning out for the auto index. In the morning, in fact, Bajaj Auto was something which I discussed on Chartbusters. But combining both of the themes, it looks very attractive that the auto index is at a major, weekly trendline support, and this starts off from the 2020 lows for the auto index. So that generally indicates that it's at a very crucial kind of a juncture. The last 2 weeks, or in fact in the last 1 week precisely, the index has seen a bit of a bounce for itself. But I believe that in the larger scheme of things, that this could be a possible inflection point for the auto index. Now the question is that whether the four-wheeler stocks would outperform or two-wheeler stocks would outperform. We'll have to take it one by one, case by case basis, because as of now it's very individual kind of stocks. For example, Bajaj Autos looks to be the stronger name from the two-wheeler pack. From the four-wheeler stocks, M&M, which was a stronger performer, that has taken a bit of a backseat. So we'll have to see which are the other kind of stocks from the four-wheeler pack which would look attractive. So as of now, the auto index looks attractive. Bajaj Auto is the top pick from the two-wheeler pack.
Okay, but I have a question to ask to Kunal. Kunal, because if we'll see the two-wheeler companies is what you have highlighted, and especially from the likes of Bajaj Auto, but when it comes to the commercial vehicle segment, and especially the Ashok Leyland, what's your view coming in on that one? Because this space is clearly outperforming.
Yeah, it's outperforming, but interestingly, Ashok Leyland has not given any kind of a major returns even prior to that. So I think 2020, 21, 20 high for Ashok Leyland was just around the 130-35 mark. 22 high, the stock made a high of I think 150, 165 approximately. So it's been languishing at this 150 mark plus or minus 10-15 rupees for itself. Even at current levels, it's very, very similar. So it's a stock which is typically a very low beta kind of a name. It tends to do well in the best of the auto run, but when there is sign of a mild pickup as well as uptick, that's a time when the stock just tends to give you mild kind of outperformances. So won't be too much bullish on Ashok Leyland from that kind of a perspective.
Right, that's Kunal, bullish on the auto sector as a whole, not too bullish with regard to Ashok Leyland. But with that, we'll slip into a very short break. More on the other side. Stay tuned.
Welcome back to Buy Now, Sell Now, a show where you get all your stock-related queries answered by the experts. In a short while from now, we'll start taking that. But before that, let me go to Ashish and ask, because Ashish, the nature of the market is definitely volatile. And if we will see, there are a lot of global cues at play. We are having some positive global cues right now. But going ahead, we have the RBI monetary policy as well. So the domestic factors are also at play. So at this point in time, how should investors place themselves? Ashish, this question. Okay, Ashish, I guess you are on mute. Would you like to answer this one?
Yes,
Okay.
sorry. Yeah. So I think this is the reason why market after a decent opening are again is slipping down also. So first of all, we have seen a very big rally on 31st March, so some breather market is taking. But nevertheless, I think uh, there's not too many reasons to worry as far as MPC meeting is concerned, because 25 kind of basis point hike is now already accounted for, because still we have higher inflation and the factors giving comfort that interest rate should come down are not in sight. Besides this, until unless, in my view, US will start reducing interest rate, uh, RBI will also not like to go ahead of curve and just pause interest rate, because if they will pause, then money of outflow will start from Indian market to other market where they are offering higher interest rate. So, in my view, as far as retail investors are concerned, first of all, you should not get too much worrying about the market or interest rate. Just have conviction in whatever the stocks you are holding, and if the stocks come down, then you should try to some SIP in that particular stock if the stock is having good value at that price point. And another thing is avoid too much day trading, in my view, in today's context, because the chances of going wrong are more than going right.
Right. Thank you so much for that. Let me quickly move to the query segment. And Kunal sir, let me come straight to you. We have Kaushik Mitra who has bought Ease My Trip at 54 bucks a share with a 3 to 6 month horizon. What's your take on it?
Now, ideally, it's a very high beta kind of a stock, so I think it's good that you have a very restricted kind of a time horizon. But the stock, I think, has corrected from 54 to 40 levels was the stock price, I think, last week or so, and it's now seeing a bounce back. I don't see any major kind of a bounce back because most of the indicators are still into a negative territory for Ease My Trip. So I think you'll have to play the strategy a bit two pronged. Maybe closer to 48 levels is where you can look to exit the stock, and then on dips, say closer to 44 levels or 40 levels, which is the previous low for the stock, is where you can look to accumulate or buy, because I think till the time the indicators are into a negative territory, the stock may trade into this 10 rupee, 12 rupee kind of a band.
Okay, so that's the take coming in on Easy Trip. But moving on, and Ashish, coming to you for the next one. Vedanta from Mumbai is holding shares of NBCC from a price of 52 rupees. She wants to know the view on this particular counter for the next 1 year, and she's already holding this counter since past 1 year. So going ahead, what's your view?
I'm not that big fan of NBCC. In fact, this stock has really underperformed the entire market, entire PSU basket. If even we see from a highs of 44, 45, we have seen continuous fall in the stock. The stock came down to 26, 27. Now slightly in the consolidation, but not too much is happening because the kind of growth which was expected is not coming. Another thing is a lot of retail investors have got stuck up in this stock at higher prices. So whenever stock goes up, we see plenty of liquidation happening in this stock. So my suggestion will be to book loss in NBCC and better to shift to some other names. I'll suggest you auto stock, which is at present around 350, and my target for this stock is 500 in 1 year, which will be Atul Auto. So this is a stock where yes, today also we have seen very good set of their monthly numbers, and continuously stock is going up gradually, and their three-wheeler EVs are going to be a big hit over a period of time. So swap NBCC to Atul.
Right, thanks for that, Ashish. Let me move on to Kunal. Kunal, we have a viewer Dhananjay who wants to understand your view on Chambal and India pesticides, Chambal fertilizers, India pesticides, with a 3 month view, or rather a 3 month holding period in account. What's your sense on both of these counters?
So I think Chambal Fort, the stock is trying to form a bullish RSI divergence bottom at this current levels of 255 to 60, where the stock made a low. I think in the last 2 or 3 days, the stock has seen a bounce with respect to how the overall markets have been structured. So you can expect that possibly 295, 300 could be achieved in this leg, but it would be a lot of zigzag move for Chambal fertilizers because the indicators are not very clear in terms of a potential up move for the stock price, and that's where the stock would take a lot of time to even come back to 295, 300 kind of a mark. So if you're patient enough for 3 months, that's a short-term target range which you can keep. For India pesticides, IPL I think is the code of the stock price. The stock is nearing a 50-day moving average breakout, not an enthusiastic chart. In the last, I think, 6-8 months, it's been just falling continuously and making a pattern of lower highs and lower lows. So I think even in that aspect, doesn't look very attractive. So the sooner it gets closer to your cost price or in minor profits, I think it's a good time where you should look to exit.
Okay, moving on, and Kunal, once again coming to you, Bhagwan from Mumbai is holding shares of BF Utilities from a price of 400 rupees. He wants to know what is the outlook going ahead since he is sitting at a loss. What should he do right now?
So I would still suggest to hold on to the stock at least as of now. Look at it this way that the stock has fallen very sharply in the last 6 to 8 months from 450 levels to 300. The good part is that I think last week or so the indicators had come back into a oversold territory on the weekly charts, which means the low the stock had made 283 could probably be a stop loss for your trade, and you can hold on to the stock as of now. I would expect that possibly in this leg of a bounce, the stock may come back towards at least 325 to 340 kind of a zone. So that's a zone where you may look to maybe look to exit and then look to buy back again if the stock corrects back towards 300 levels.
Right, Ashish, let me come to you. Subrata from Kolkata, Subrata Mukherjee, is looking to buy Polyplex and he wants your views on it from a long-term perspective. What's your sense?
Polyplex, we have seen continuous sell-off in this stock, and the stock from highs. I think the stock has become just half only. And again, the reason is, first of all, the growth is slowing down. The kind of growth which was there in company for last 3 years is now moderating. We have seen the last quarterly numbers are also not that great. Another thing is the management has shown an intent to sell the entire company of their stake to a new buyer. It looks like that is also not happening. So those investors who have bought in that anticipation, they are dumping the stock. So my suggestion will be to remain away from Polyplex. Instead of this, look at Polycab, which approximately similar name but better business model, and the stock is also performer and can give better returns once this quarterly numbers come. So buy Polycab instead of Polyplex.
Okay, but on to the show, let's move on. And from the IPO space, there's a new IPO offering coming your way, Avalon Technologies. The IPO opens for subscription today till 6th of April. And talking of this particular company, this is the leading fully integrated electronic manufacturing services company. And this IPO is having a size of 856 crores with a fresh issue of 540, with a fresh issue of 320 crores, and offer for sale is 545 crores. But let's understand with the company what are the plans with this fresh issue, wherein all the 24 anchor investors has already invested 389 crores as of now. But when it comes to the retail participation, what is the growth outlook ahead? Let's understand from the management itself. Onto the show, we are being joined by Kunamed Bicha, who is the chairman and managing director, as well as RM Subramaniam, chief financial officer. Hi, very good morning, gentlemen, and thank you so much for joining us today on ET Now. Mr. Subramaniam, firstly, let me come to you. You will be using rupees 145 crores from the fresh issue to pay your debt. At the end of November, you had a debt of 304 crores. How much will that come down, and give us a sense of the working capital cycle in your company?
Out of the 320 crore primary issue, we are planning to use 145 crore for debt reduction. So as you rightly said, the net debt is about 300 crores. It will come down by half, and that is one of the main purpose of the primary fundraise. Okay, and just to take a one step back in terms of trying to, the rationale for the IPO itself is make sure that the company is fully funded for the growth trajectory what we are seeing, and that's the key purpose. And out of which the sub purposes in terms of reduction, which we will use it later as we go along to re-leverage and grow along. That's in terms of the debt. In terms of the working capital, our inventory is a slightly working capital intensive business. Our inventory is about 120 days of sales, and receivables about 75 and payables about 50. That's the working capital cycle. And today it's slightly elevated with about the net working capital cycle about 150. As we move along, we expect the component shortage to come back to normal, and then hopefully we should get back to the steady state, which is about 60 to 90 days of net working capital cycle.
Right. Let me switch over, Mr. Kunamed. If I can ask you, your business is heavily dependent on semiconductors and chips, from what I understand, and there have been serious disruptions in this particular space with regard to supply chain. So when you see that normalizing, how quickly, and is there a timeline?
So we are already seeing some of that. See, if you go back 12 months back, we were in a serious situation. The whole industry was in a serious situation on the component side. We are seeing that ease out. I would say 30-40% of the problem is still left. We see that coming to a normality after 3 years nearly, in 6 months to a year. And today, as you very well know, the consumer industry, the components have been, there's a glut of that. So we would see that flow into the industrials, the auto, in the near future. I think it's a 6 months to a year time frame. We should be back to our normal lead times.
Okay, but Mr. Kunamed, your company has a dependence on a limited number of customers for a major portion of your revenues, and your revenue share with the top 2 customers has fallen from 26% in FY22 to 18% for the past 8 months. Is it because of seasonality, or there's a genuine fall over there?
We are adding customers, a larger piece of customers, so that portion comes down as these new customers are added. So it's a better problem. We're getting more diversified. I think we had some 89 customers. We added 15 or 16 larger customers last year. So so we're looking for the top 5 to be spread much lower, and our risks in different industries, because we operate in multiple industries, and each having a different set of customers on the top.
Well, with this, we'll let you go on that, gentlemen. Thank you so much for joining us today on ET Now. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back, and we'll be taking more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. We're still with both of our experts taking your queries. For any queries, of course, the numbers flashing on the top of your screens. But let me very quickly take it to Mr. Ashish. Ashish, tell us, Indu from Warsaw is asking us this question. She holds MapMy India, 1 to 2 year horizon. What's your view?
I think she can continue to remain invested in the company. Though after IPO, excellent listing, we have seen some amount of sale-off coming in the company. But in my view, correction, we have seen good amount of correction already in the stock. And as far as numbers are concerned, we haven't seen any set of disappointment in any of the quarter post-listing also in this stock. So you can continue to remain invested. In fact, if it falls further, you can even add to your portfolio. In long run, it's a good company to remain.
Moving on, and Kunal, coming to you, Rakesh from Delhi is holding shares of Tata Steel from a price of 108. What is the outlook ahead? Because since he's not sitting at much of a loss, so should he continue to hold on?
Well, you can continue to hold on. Now, the only rationale which I can probably attribute to Tata Steel would be that the stock has been a big underperformer over the last 2 years, both on the upside as well as on the downtrend for the metal stocks or the metal index rally as well as correction. So that indicates that possibly the stock has gone through a stretched kind of a time-wise correction. Sooner or later, the stock would get into a bounce back. Tata Steel, being one of the formidable large cap names, would eventually show signs of a major rally. But then, I've seen this historically, that whenever the stock is on the verge of forming a major bottom, it generally happens when there is a sudden sell-off for the stock price. So maybe over the next 1 or 2 months, the stock can go into a sharper swing of correction. So if in case it comes back to say 90-95 kind of a territory, then you can look to average, provided you have a longer term time frame.
Right. Ashish, let me come to you. I have Harindra Kohli, who from Dehradun, who has this quick question. Indiabulls Real Estate, he's bought it at 63 bucks a share. 5,000 shares is what he's sitting on. Now, what should he do with regard to his holding?
Again, I'm not very bullish as far as Indiabulls Real Estate is concerned. In fact, if you see the performance of the stock vis-a-vis other large realty player, stock is going actually nowhere if you see. And we have seen a good amount of sale off here also. So instead of this, better focus on the frontline players in real estate sector, which are in my view Godrej Properties. You are getting at very good price at this price point, as well as macro tech developers is also idea which I like in real estate place. So India Bulls you can exit and invest in either of
Sense that the stock is eventually restarting a strong uptrend for itself. 380 approximately is where the stock is trading right now. My expectation is that the stock could probably get back into that 400 club. 395, 396 was the previous high for ITC. So this time the stock may probably try and challenge that 390 plus mark, high for itself. So that could be a stock which you can look to buy. And traditionally as well, being a low beta stock, it always makes a lot of sense to have this in a bit of a volatile kind of a market environment. And the other stock which I would be betting upon on the bullish side would be Coal India. I think 215 approximately is where the stock is trading right now. Seems to be forming a good base on the short term as well as on the medium term charts. There are some strong trendline supports which have emerged for Coal India. So that's a stock which I would suggest to buy. Maybe 230, 235 could be a potential target range for Coal India over that kind of a time frame.
Right, and Kunal, let me stick with you. TVS Motors at 640, we have a viewer who's bought it. Should he book profits now is his question.
Well, it depends. I think if you are looking to invest this money into some other auto name, then I would probably suggest that you can shift from TVS Motors to maybe a Bajaj Auto, something which I flagged off at the start of the show as well as in the chart busters today. That's a stock which is actually looking very attractive on the charts prospectively. But then since you've already managed to ride TVS Motors from those 600 plus levels and the stock is at 1090 plus mark, you can continue to ride on if your time frame is long term, but it all depends on whether you are looking to shift profits from current levels on TVS Motors to some other auto name. If that's the case, then I would suggest go with Bajaj Auto.
Okay, Ashish, Deepak is a long-term investor and holding shares of HUL from a price of 2,215 rupees. He wants to know what is the outlook ahead, and since he's sitting at a profit, what to do next?
I think you should remain invested here. I don't see any reason that you should kill this stock. Though stock for last few days is slightly soft, but in my view, this quarter again we are going to see good set of numbers from HUL, and my target for HUL in this year is 2750 mark. So this is slow and steady stock, but it gives a lot of cushion to your portfolio. So remain invested.
Liquor stocks that you have your eyes on, which you can suggest. We have a viewer specifically asking you that question, Ashish.
Yeah, so the stock which I like in liquor industry is Som Distilleries and Breweries. This is a pure beer play, and last year they did a loss of around I think 9 crores. This year I am expecting such a bounce back that they will do a profit of almost 70 crores. So 1,000 crore market cap company and doing 70 crores profit. It's a steal in my view. Invest here.
Ashish, one more question coming your way. Krish wants to know which one is your preferred pick amongst PI Industries or SRF, and why?
Yes, PI I don't like much because outlook for this sector is not that great. First of all, there's pressure related to margin we have seen. There's the offtake related issues. So the kind of sales growth which was coming for years in PI industry is not forthcoming. We have seen last few quarters for that. And instead of this, SRF is a better bet because SRF has done really big expansion. They are having monopoly kind of position in the business where they operate, and stock has also corrected quite a bit from high. And I am expecting again very good set of numbers in this quarter from SRF. So no doubt SRF is going to be my pick number.
Right, Kunal, if I can switch over to you, we have Siva from Chennai who has Cochin Shipyard, 200 shares at 485 is what he holds. He has a 3 to 6 month horizon. What can you tell us about the chart as well as about the stock?
I would suggest a hold on Cochin Shipyard. I think over the last 2 or 3 days, I've indicated that possibly the CPSE index would get into a breakout mode, and 2008-25 approximately was where the CPSE index was, and the index has moved up higher. Cochin Shipyard apparently is one of the stocks which is part of this Nifty CPSE index, and the stock has also managed to participate quite well 2 or 3 days back. It managed to rise up from I think 420 to 460 approximately 460 plus levels. So in the last 2 days post that breakout, the stock has gone to a mild correction, but I believe that it set the tone for the stock to move up higher. 480 approximately is a buy price. I would suggest a hold. Near-term targets you can keep it closer to 520, 540 for Cochin Shipyard. But my sense is that the stock, if it restarts a strong uptrend, could go much higher than those levels as well.
Okay, Kunal, the question is from Shri from Kochi, and he's holding 100 shares of Phenolics Cables from a price of 583. What we are seeing in this particular counter is the stock is near to its 52-week low. He wants to know, is this a good time to book profits, or rather hold on? If that's a hold, which are some of the targets he should be looking out for?
Yeah, the stock is doing pretty well. It's at its 50-week high. In fact, I think if I'm not wrong, it's the all-time high levels as well for Phenolics Cable. So good time where I believe you should look to start booking out profits, because the indicators have just started to enter into a overbought territory for the stock price, which means that at every rise on the uptick, the stock would probably face a pressure by traders who are looking to book out positions. So you can either trail your stop losses to maybe a swing low of 800, or in case if you're looking to book profits, then you can start at current levels, and then every 2% to 5% rise from current zone is where you should look to start booking out additional profits for the stock.
Right, Ashish, we have S. Srividya from Chennai who holds IEX. She's been averaging down actually all the way from 157 to now, and her average price at the moment is 142. She holds 2,500 shares. She's a bit worried about the company but believes the fundamentals are strong. What's your sense on it?
Yeah, as far as fundamentals are concerned, I don't have any issue on this. And one major reason is why the stock is falling. There's a lot of scaling we have seen this stock from institutional investors, which is taking the stock down. Besides this, the kind of growth which was there in previous year in this company is again slowing down. And we have seen last few quarters, they are having pregnancy of profit of 70, 71 crore kind of numbers. Besides, last year they did 300 crore. This year also they will do even less than that. And this is the reason the stock is coming down from 180 odd levels to this price point. So I'll suggest not to average out. Just let's wait for some pressure in this stock. And if you get this price at 150 and all, try to exit from this stock and switch to any direct power play which will give you better.
Is it on rise? Is this view coming in on IEX? But Ashish, query on the power name is the next one. The question is from Leon, and he is holding shares of Tata Power from a price of 230 rupees. Currently at a loss, but today we are seeing all these power companies buzzing on the back of the power tariff hikes. How do you see this development and going ahead? Any hopes on recovery on Tata Power?
Yes, though the prices have increased in Tata Power or Power, they have the prices in Mumbai. But the only issue is they are also having pressure of rising costs. So this is the reason that market is not too rejoiced with this announcement. And this is something we should have done earlier, but is happening now. So I'm not that bullish as far as again Tata Power is concerned. I think rally should be used to exit this stock. Instead of this, I'll suggest to invest in Torrent Power, which is more promising, along with KPI Green Energy, which is again quite attractive at this price.
Right. Let me switch over to Kunal. Kunal, talk to us. Bhagwan Bablani from Mumbai is telling us that GSFC is one of your favorite counters. He's talking to you and telling you that it's one of your favorite counters. He has 500 shares at 126 bucks a piece. So what's your advice on this one? Should he hold or should he shift? And if he shifts, what should he shift to?
See, I think we should hold on. In fact, I think last week also I had given a similar opinion for the stock that you should look to hold on to the stock price. It's getting into a zone where the stock is nearing an oversold territory on the charts. it's trading below the 200 and the 50-day moving average. So even if it retraces back towards the 50 DMA, the stock should come back towards your cost price. And if it manages to rally up higher, then maybe closer to 130, 135 is where you can look to have a short-term target potential for GSFC. So hold is what I would recommend. Near-term target range, you can keep it closer to 130, 135 range.
Okay, moving on, and Ashish, coming to you. Subramaniam from Chennai is holding shares of Karnataka Bank from a price of 106. Is this a good time to book partial profits in this particular counter, and what's the outlook ahead?
No, I think you should remain invested. Just a few days back, it was at around 136, 38 levels, and slightly some correction is there now. But in my view, it is one of the strongest bank. If you see from highs of almost 160, stock is still at 130, vis-a-vis other banks, we have seen almost 50% retracement from the peak. So as far as financials are concerned, there's continuous improvement in financials also of Karnataka Bank. In fact, if by any chance this stock comes to 125, 122 levels, I'll suggest you to further add this stock in 1 year time. Even you can get 30% kind of upside. So this is one of the safest bank to own.
Right, Kunal, Karthik Raja from Chennai is holding IndusInd Bank April futures at 1073, and he's planning to hold up to 100 points from the buy price. Is it a good hold, or should he exit at some profit before the 100 points? What's your sense?
So I think that booking of profits and rebuying should be a good strategy for IndusInd Bank, because the only concern which I spot on the charts is that the stock is on the verge of showing a death crossover. It's a technical term which indicates that the 50-day moving average is about to break below the 200 DMA. Historically, that has indicated that the stock remains under pressure, just around that 50-day moving average. So if that happens, maybe 1105, 1120 approximately could be a range where the stock may take some bit of resistances. So I think booking out profits on the upside at minor profits, minor gains, and then rebuying the stock at the corrective levels could be a better strategy for IndusInd Bank.
Okay, Ashish, the next question is from Bharat, and he's holding three counters. The names are PEL, Hudco, as well as IDBI. In all of these three counters, he's sitting at a loss of 25 to 30%. Any advice coming in to average out any of these names, and rather to make a switch, any of your top picks coming for him?
Yes, in fact, all three stocks are the ones which I actually don't like, or in my view, they have uh, not given any return to investor for quite some time, in spite of whatever the positive news flows are concerned. So I'll suggest a few stocks that you can swap these particular stock and can get better return. So my first pick is Alicon Engineering that you can add in the portfolio, which is a power transmission and material handling company. And whatever the profit they did in last year, I'm expecting from 139 crore this year. This year they will do almost 240 crores. So it's a no-brainer to buy Alicon Engineering at this price. Another stock which I have already mentioned as Atul Auto, you can add in portfolio. You can get around 30% upside in this year. And third stock which I like is Apar Industries that you can enter at 2,500 level. Again, a stock where last 3 quarters were so good that they have already surpassed their last full year revenue, and I'm expecting excellent set of numbers from Apar this quarter also. So this stock has a potential to even touch 4,000 rupees mark by end of this year. So don't miss these three instead of your non-performance stock.
Okay, so those are the top recommendations coming from Ashish. So Bharat, you can look into that. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now, a show where you get all your stock-related queries answered by the experts. And continuing with the same, Ashish, coming to you for the next one. The question is from Mahalakshmi, and she's holding 100 shares of Mahindra Logistics from a price of 535 rupees, but currently at a loss of over 30%. What to do next? She is a long-term investor. Is that a hold, average, or book losses?
In my view, book loss is a better strategy. First of all, logistics stock, we haven't seen any recent run up in this stock for quite some time. And again, the pressure of rising cost is something like which is keeping upside in these logistic companies' prices, stock prices under check. So my suggestion will be to exit from this stock, and I'll suggest instead of this, look at direct auto play, which is JBM Auto. You can look at that 680 levels. I'm expecting the stock will touch 800, 850 marks on account of very good traction, which is building up with the EV buses where JBM is a major player. So exit from Mahindra Logistics is advised.
Right, Kunal, we have a viewer who wants to know your view on Vedanta. He's Manish from Baroda.
Well, I think it's a stock, which I would believe is a bit more sideways off late in the last 2-3 weeks, prone to a lot of news flow. 290 approximately is the resistance for Vedanta if it's a short-term kind of a view which you're looking out for, and I think closer to 270 is a major support. It's right at the midpoint of this trading range for itself. So, if in case the stock dips back to that 270 mark, is where I would suggest a buy for Vedanta. At current levels, the risk reward is 1:1, so it doesn't look like initiating a buy at current zone, but I think 270, 275 could be a band where you can look to buy the stock.
Okay, Kunal, the next question is from Rama Raju, and not much time into the markets for him. He entered in 2022 itself with a purchase of M&M from a price of 1181 rupees. He can still wait for the next 1 to 2 months. What should he do now?
Yeah, you can continue to hold on, but my only concern is that the stock had a fantastic uptrend from mid 2022s when it was almost at 750 to almost 1400 levels where the stock rallied up towards. So this is the last 2 months of correction for M&M. Not sure that whether it's going to extend for another couple of months or whether the stock would bottom out. So as I flagged off at the start, that the auto stocks and the composition of the auto sector is changing. At least over the last 2 months, we've seen that pattern. So M&M is no more one of the leader stocks from the auto pack, and somehow I would believe that leadership settling would take another couple of months for the stock price. So possibly in the next 1 or 2 months, the stock may go into mild correction further. If in case it comes back to say 1050, 1100 mark, look to average further.
Right. Kunal, I'll stick with you. We have Vidya from Chennai. Firstly, she thanks you heartily for the right guidance you've given her in the past. What she suggests now is that she's holding supply at an average of 950 bucks a piece. Request your guidance as to whether she should add or wait.
Thank you so much for that. My sense is that Cipla is getting into now a bit of an overbought territory on the very short-term charts. Now, if you bought at 950 levels, I would suggest wait for maybe another couple of days. The stock could correct towards 860, 870 mark. So just around that 870 levels is where the stock would probably become a bit more attractive. Your average price would also shift down to 900, 905 for Cipla if you try and average at those levels. So I would suggest an average, but only closer to that 870 mark.
Okay, so that's an average coming in for Cipla. But with this, viewers, it's time to kickstart the rapid fire session. And Ashish, the first question coming for you. The question is from Poonam, and she's holding 1,000 shares of Manali Petro from a price of 66 rupees. A good up move in today's trading session. What's the outlook ahead?
Yes, as the crude prices are again going up, so their refining margin will again start improving. And this is the reason Manali Petro is going up. In my view, remain in.
Right, Ashish, I'll stick with you. Kabir Bedi has 180 shares of Godrej Consumer at 915. He wants your medium-term view, maybe 6 months or so.
This is a stock which I don't like much. Instead of this, I'll prefer that you go with ITC or HPL, which hold more potential.
The next question is from Vaishnavi, and in 2021 she invested in Root Mobile from a price of 1860 rupees. Should he continue to hold on or sell?
Yeah, I would suggest to hold on.
Right, Ashish, I'll come back to you. Deepak from Mumbai has 50 shares of HUL at 2215. What's your view? He doesn't have a holding period in mind. Should he sell? Should he hold?
No, I think remain invested in HUL. You will get good price once their quarterly results come for this one.
Ashish Radhakrishna wants to know the medium to long-term outlook on Gland Pharma. She is holding shares with a loss of 21% currently. What to do?
Yes, 21% is a big loss, but I'm not advised to exit at this price point because stock is at almost at bottom, and now the pharma stocks have started showing some strength. So Glend as a whole, in my view, even you can think of averaging Glend Pharma.
Right, Kunal, we have Srinivas from Chennai who has 2 lots of IDFC First, bought at 55 and 60 bucks respectively. He needs your technical advice. What should he do?
I think you should look to hold on.
Okay, Ashish, the next question could be a bit tricky. So let me take it from Kunal. Kunal, Yogesh wants to know the technical view on Adani Green Energy.
Well, I would suggest to, I don't track the stock very closely, but I would suggest that to avoid such kind of names in this kind of market.
Okay, with this, it's time to wrap this edition of Rapid Fire as we are completely out of time in this edition of Rapid Fire as well as Buy Now, Sell Now. Thank you so much, Ashish and Kunal, for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, it's time to bid you goodbye from me and Harsh and the entire team who put this show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead just after this quick break.